Welcome everyone to Endgame Finance. Today we're talking about Rivian again. Rivian just released their quarterly earning results and they were pretty good. They were spectacular. The most exciting thing from this earnings call is Rivian is announcing that commercial vans are now available to more companies. Now, in my last video, I actually predicted they were going to announce this during the earnings call. And this is a really huge news because they're still delivering 100,000 EDVs to Amazon. However, now they're also signing up other customers. Today, Rivian announced it will enable other companies to purchase its custom design Rivian commercial van, RCV. The move provides companies all around the world more opportunity to electrify their delivery fleets with state-of-the-art vehicles, which will help further reduce CO2 emissions. All of these delivery companies like FedEx, UPS, USPS, DHL, and many other just postal services around the globe, they all really want these vans. However, infrastructure is a huge issue. That's why Rivian is launching pilot programs. So basically, they're getting companies to sign up to be their partners. And while they're partners, they are transitioning on to electrifying their fleet, getting all the permits for the charging stations, actually building out those charging stations, finding enough electricity supply to power thousands and thousands of delivery vans. So this is a huge process, and Rivian is really doing this the right way. They're signing up all these customers for their pilot program because in the future, if any other company wants to enter into this market, you'll have to go step by step and take months, if not years, to do the same thing that Rivian is currently doing. Now, my prediction is Rivian will continue to roll out these vans in Germany. However, they'll probably start signing up partners in Germany like DHL and the German Postal Office. So I see these vans being extremely net positive to Rivian, especially because they have positive gross margins. Basically, Rivian is not losing money on these vans, or at least they're not losing as much as they are on R1 platform vehicles, which are still at a loss around $30,000. Rivian has reduced that cost this quarter almost 10%, and they will continue to reduce those costs. However, EDV is the huge potential for Rivian in the future, especially once they sign up all these customers, once they sign them up on the network, once they're using Rivian Fleet OS, once they're using Rivian vehicles, it's very likely in the future these guys will not go to anyone else but Rivian. So only use Rivian vans and replace those vans with newer Rivian vans. Total revenue for the third quarter was $1.3 billion. This is also pretty huge considering Rivian is a fairly new company. And they're continuing efforts to drive material cost reduction down through commercial negotiations and engineering design changes. So Rivian has been pausing their production line every so often just because they're including newer engineering designs in their production line, which reduces costs. They're also able to renegotiate and have some negotiating power with their suppliers currently because they are actually growing as a company. Their name is getting out there. A lot of suppliers now are actually wanting to do business with Rivian and wanting to give them discounts, willing to renegotiate some contracts, just because it's looking like Rivian is going to be a major player in this industry. And they want their potential business in the future. Once R2 platform is pushing out hundreds of thousands of units, those will all need parts, and all of these suppliers now want to be part of that just because Rivian brand is really resonating. And it's still forecasting that they will reach positive gross profit next year. And it's basically all of these things that we were just talking about that will get them there. Improve design changes for their vehicles, in-house suppliers like their Enduro motor, basically their own battery technology, their own software that's fully integrated with hardware. All of these things are just coming online still, and these are all going to help reduce costs tremendously, especially because early orders of Rivian are almost fulfilled or will be next year. These orders were basically vehicles that were sold at a huge discount just because no one was able to predict that pandemic would disrupt the supply chain so much. So Rivian had no idea that these vehicles would actually cost them so much more. So they sold these vehicles at a huge loss, and that's pretty much ending the following year. So all of this is just guiding them towards profitability in 2024. So Rivian is still going to continue losing money, But this will be primarily because of their new plant. So they will be investing billions of dollars in equipment and construction spends. So it's going to look like they're doing really bad. However, once the factory is built out in 2026, I see Rivian just turning into a cash generating machine. I believe their CFO actually said that they're aiming for 25% gross margins and 10% free cash flows. Now, they will probably use up at least half of this cash to fully build out their factory in Atlanta, Georgia. So around 2026, once they enter really full profitability, they might have around $1 to $3 billion in cash. However, at this point, they're going to be generating so much free cash flow that this will be not an existing problem anymore. However, I can foresee them actually selling some more bonds, $1 to $2 billion more, just to have some reserves, just to have a little cushion of cash. And that'll probably be their last cash raise, at least I'm hoping, because it is dilutive to existing shareholders like myself. There is absolutely no slowdown in their demand. They actually increased production to 54,000 units. So Rivian is not seeing any of these slowdowns that traditional automakers are. There's still such a huge demand because R1 platform is a luxury vehicle, and people that purchase these luxury vehicles don't really care about interest rates, and they haven't even entered Europe or Asia or Africa or South America. So basically, they're still not even close to fulfilling their full global demand for R1 platform vehicles. I can see this demand being in the millions and millions of units right now worldwide. So they have about a decade to go of production before they exhaust this just existing pent up demand for R1s. And EDVs just basically have almost unlimited demand because everyone is going to want to electrify their fleet. We see Amazon, it's going to be followed by FedEx, UPS, USPS, DHL, and probably hundreds of just national postal services worldwide. So I see strong demand for both of these products currently. Foresee no slowdown in demand for EDVs or R1s, and with increased volume production, management, tweaks for the production line, reduction in costs, we're negotiating with suppliers. These are all the things that are guiding them towards profitability in 2024 and above. Now we look at the Rivian's numbers. Basically, everything is looking pretty good. Production and deliveries are increasing tremendously as expected. Revenues are rising as well. And we see gross margin actually improving. Margins are currently at negative 36%. They were at 37% previous and 81% prior to that. So that's a huge improvement in costs because of all the things we mentioned. And one last thing I want to really point out is we see total assets of close to $17 billion for this company if you include all their cash, all their factories, all their inventory. And this company has a market cap of $17 billion roughly. So total assets are basically equal to total market cap of the company. If this company gets liquidated today, basically absolutely everyone gets their money back, everyone who's invested their money. So I see this as a really huge discrepancy between total assets and company value. I think Rivian as a company should be valued a lot more. I see at least $30 to $60 billion valuation that should be currently, and I see this company extremely undervalued still. That's why I'm remaining a shareholder. I will probably be adding some more shares. I am buying other things, which is kind of slowing me down a bit in this task. But overall, it was a really great quarter from the company. Basically, they're delivering on all their promises. They're getting those gross margins to become positive pretty soon. They're reducing costs. They're releasing the electric delivery van to pretty much everyone in the world. And I see good things just coming from here on forward. So that's it, guys. I was really impressed with this earnings call. It was very professional. It was really informative. They detail step by step how they're going to get to profitability. And I believe them. I believe in this management completely. So that's it, guys. If you have any questions, comments, or concerns, let me know. Guys, like, subscribe, and as always, have a great day.